Hey everybody, how we doing? Happy Friday. Welcome back to the final hour. There we go. All right. Melt up, that's old news. Meltdown, that was Wednesday. Today, a little bit of fight back. And that's where we're at. So let's have a look at everything this morning. I've got a couple of assessments on where we are potentially headed. We are going into 2 weeks of holiday trading. That's not going to be super easy to navigate. Expect the markets to be very low, very quiet, usually thin volume. Typically, we start to see holiday trading. If we're sitting here near all-time highs, holiday trading would just take the market higher. Unfortunately, this week we had two bigger catalysts. We had PCE today, which got the market moving a little bit, and I think it was just an eager buy the dip because the market was already down 4 to 5%. The S&P was down from high to low, I think just over 3%. So we had a 4.6% sell-off high to low on the Q or the SPY, pretty decent. And we had a correction on the QQQ over 5%. So all that within about 2 days of intraday trading and one gap lower today, 5.5% on the QQQ, over 4% on the SPY. The Dow is finally coming back with at least a gain off the 100 moving average. We did close the election gap. I don't know if this market is done going down. I think for the Dow right now, taking out this low as well, we could be looking at a dead cat bounce to the upside and then more of a flush down. The issue is because of lower volume through the rest of the year. Okay, through the rest of the year, the best we might see is maybe some sideways, maybe a little bit of a recovery. I don't think the Santa rally is going to be capable of getting back to all-time highs in the Dow. I mean, again, I don't think, but it'd be a pleasant surprise if we do. But if we go high to low, we get up here for today, and then there's just nothing really transacting through the next couple of weeks with Christmas Eve, Christmas Day, New Year's Eve, New Year's Day. Brokers going to be closed early, no trading on Christmas Day or New Year's Day. Then I don't really know what to expect. I mean, if the market drifts a little bit up, that's understandable for the last couple of weeks of the year. That's pretty average historically. But as we get into January, it's like, does the market pick up on that discount and run with it? Or are we looking at, all we're doing is using the FOMC candle coming back in to find some balance here. And this is a flush lower, a pullback to find where it all started. And then the backside is rejected for another chunk down. We could still fill this entire gap. The Dow filled the gap. The Qs are close. The SPY is close, but they didn't fill the election gap. Okay. I still look at the bar count. I made this a bit of a claim earlier this year that, going 10% higher is probably a lot more rare than it is going 10% lower. And we already started off with a 4+% correction. So, I'm asking the market like, hey, it would be easier for me, if the market wants to listen to me, it would be easier for the market to do something like this: high, low, lower, high, lower, low. And we just get the ventilation out of the system, right? We just air it out. We let the bubble. It's not really a bubble, but it's like you take the balloon and you just let some air out of it and you let this thing fall down. You let this thing, fall in a little bit of an orderly fashion. And if it does that, like, I'm way more bullish at a healthier spot than I am just watching this thing like every dip is buy the dip, you know? I mean, obviously that can happen, but I think there's a lot of I don't know, there's a lot of under the surface issues that we just kind of had exposed on Wednesday. You can see how sensitive the market is to bad news, and I mean it's pretty simple. Right now, the market knows deep in its soul and every fiber of its being that it can't sustainably run to all-time highs, even though it's market cap weighted. It can't run to all-time highs on 10 stocks. And now it's essentially 8 stocks. You want to throw in Broadcom and make it the fantastic 8, or the, doesn't matter. Mag 7, Magnificent 8, you know, can't be stopped, doesn't matter. 10 stocks essentially have carried the market all year. Okay? And in with those 10 stocks carrying the market, we've had heavy amounts of order flows that drive the market to all-time highs. We've had the story on AI and NVIDIA and semiconductors that carry the market to all-time highs. We had a little bit of breadth where utilities were higher, financials were higher, and it was odd to see the sectors perform so well. But let's see year to date right now on sectors. I'm actually curious. So year to date, we just went from everything in green to real estate, flat, materials, flat, healthcare, flat, energy, flat. All these were up, right? All of these were green not that long ago. But unfortunately, that little hiccup that we saw the last probably 30 days or even this last week or two, there was just more going into the S&P, which is market cap weighted like the SPY, or going into your just your top performers. I mean, financials have been pretty darn resilient, which I thought was interesting. I'm actually going to check on something today. Visa, I got filled on a trade on Visa today. I think I did a 320 by 3. Let me check. Visa. 320 by 315 on Visa for a $1.95 debit. So that was in my Pulver alerts for A1 trading. Let me find that here. MA. Yep. So I'm going to jump to that one and update this one. So this is filled. And I don't know if MasterCard was filled. So this one's filled. MA is still pending. All right. So Visa got filled. MasterCard's still pending. All right. I'll watch those. So I put in a 320 by 315 bear put spread. And then I added a trade on Intel. I just did a 19 by 20 bull call spread. That's out to the 3rd. All right, so those trades are in. Let's go QQQ. Okay, election gap is down towards the 490. It's basically the 500 mark. 500 is testing the pullback, and 495 would essentially fill the gap here. So I'll just drag this box out. I guess I can get rid of that bottom. That doesn't really matter. I can get rid of that bottom there. So do we end up filling the gap? We'll find out. I'm still sitting on a hedge to the end of January on the QQQ. If we go high, low, lower high, lower low, I gave myself enough of a window that if we do flush down again, I've got a 585 debit with a 23% $23 credit upside, so I could turn that into a nice little gain. I think that's almost 300%. So if I went $23 minus 5.85 divided by 5.85. 293% gain on that hedge if I max it out. So anything over like 200% is pretty good. 250 is fine. So I'll keep an eye on that one. But, we pulled back basically this week to the 50 period moving average. So little pullback, 5+%, 50 period moving average. How excited is the market? It's hard to tell. The Fed kind of delivered some shock. It was an interesting speech from Powell. He was way more vocal and almost seemingly unscripted than I think the market was expecting. The market was thinking that we'd have, 3 to 4 cuts in 2025 and just the Fed would continue to cut at these all-time highs with a stronger economy and having some resiliency. But instead, the Fed just pulled back and they're like, look, maybe 1 to 2 cuts, but we're going to be restrictive right now and stay restrictive. And so now that's the new narrative. How restrictive does the Fed want to be? Can they afford to be restrictive without breaking the market? We'll find out. I still think that the bigger risk in the markets is going to be the bond market. I think the bond market is probably the most vulnerable thing. So if you take a look at TLT, we hit some fresh lows. You go to the yields. So my 1 to 3 year fresh lows on Wednesday, 7 to 10 year fresh lows on Wednesday, TLT fresh lows on Wednesday. Are we down to some really attractive levels? No. In fact, I wouldn't touch bonds until my chart alarm goes off. I think there's more potential. There's just more potential risk on bonds, in my opinion. I don't think this market can just grind like it did the last 2+ years. So I'm a little cautious, and I know that this sucks to have this be like my common mantra in the markets, but it's like cautiously bullish, cautiously bullish. I am cautious. I'm way more bullish if the market pulls back to a respectable amount. If we get a 7 to 10% correction, I'm way more excited about getting positions in and throwing some deployed capital back into the markets. Right now, I'm just going to wait. Having a little tiny haircut, a little tiny one-day sell-off is not enough for me to say I'm in. It's not enough. I recognize what euphoria looks like when we've got Fartcoin at $1 billion market cap and we have, 10 10 stocks leading the entire market and stretching us into levels. We've got 100% pegged risk appetite and sentiments at these, crazy 40-year highs. It's just a little much. And, I'd like to see the market offer some reality. And I don't know, maybe it's a page out of Buffett's book where he's been hoarding cash and being a net seller. Speaking of OXY, I'm still in OXY, and it's up to 47. So I sat in this one a little bit. I think I have some protection on OXY. Let me check real quick. So OXY, KO, I'm going to have to add another covered call there. That's no big deal. Some of my trades for today that expire. SPY, what's this one? Oh yeah, that's a calendar spread. That's toast. That hedge closed out for a nice little gain that was over 1,000% or $1,000 per contract. And I've got some hedges in here that are just treading water. Still have some credit spreads in. What else? Google. Those are profits for this week. Nvidia. I'm not getting assigned on Nvidia. That 132 by 130. That was a ratio spread. Right now, that thing is up around $260, and that is the trade. It was an income trade, but I was kind of doing it with the intention of trying to own the stock at 125. And Nvidia, fought back hard and didn't stay down, which is fine. I mean, it's just an income trade, but I'm not going to get the assignment. I still have the potential to take assignment if we're below 138 next week. I could consider taking some assignment, which I may end up doing, or I don't know. I think I might take the assignment and just offer up I might look at a collar trade or something. I'm going to look at some early income. So I'll play around with that next week. And then this is a out of the money credit spread. That one's going to be good for, that's like $300. So anyway, it's looking good. It's fine. GLD, all looking good. So out to December 20th, I've got a 200 by 190. That is going to close out today for full profit. That's up a little bit right there. Netflix, this was a 111 trade with a hedge. That's up $268. That's going to be for profit. Amazon, a bunch of trades. They're expiring December 20th. Credit spread, both for profit. That's good. Meta, same thing, 111 for income. PayPal closed out. This is another trade here for a bigger credit spread. That's for profit. Tesla for profit. This is a ratio spread. So up around, I don't know, like $200 for the ratio spread. Not getting assigned. Coca-Cola, I'll just repair it. I've got the break even down to like $64. SVXY profit there as well. NQ is a hedge. That's going to be for profit today. AMD is going to be one of my losses. Russell, still looking good for profit. And that's going to close out today for $625. Good. Silver, got this out to next week, the day after Christmas. What is this? That's looking fine actually on the futures market. Gold, looking fine as well in the futures market. Those are out to next week. OXY, covered at 51. How much can I get out of this covered call right now? It's trading for 4 cents. It's probably more cost effective for me just to take this and roll it. So let me see what my cost basis is. Okay, by the way, just seeing who's out there today. Hey, William, how are you, man? Let me get to my tracker here. So I'm going to go OXY. OXY, willing to own, currently break even of 50.10. Okay, so I'm going to look to roll this out. So 50.10 is my break even. I'm going to do a quick roll, and I roll this out a week, and I roll this down. I get 16 cents. That's a repair. Let's go to, let me see what the end of the month looks like. So if I roll it out to the end of the month, keep it at 51. So if I roll this down, let me just do a quick repair here. So if I have 500 shares, 50.10, take away 89 cents, 49.21, get it called away at 50. I make 79 times 500. It's 395 income. That's safe. I mean, I don't know if this thing is just gonna rip hard back to $50, but I'm just gonna go ahead and do my best to lower the cost basis. So let me see if I can squeeze out 90 cents. maybe I can get 90 cents for this roll. And I'm going to go out in time and down in strike, but get 90 cents credit. And that would help lower my cost basis a little bit. Filled at 90 cents. Okay, very good. Let's go to another one here, OXY. Roll this one out to the end of January and down to 50. Get 90 cents for that one. Filled, no problem. Okay, do a quick roll here. Out to the end of January, down to 50, 90 cents. Filled. No assignment on this stock, I don't think. This one just has partial. Okay, no worries there. This one only partial. This one only partial. This one no shares. This one no shares, and this one has 500. So my 51, do a quick roll out to the 31st, down to what? Try to get 90 cents. There's no way. Come on, fill me at 90 cents. Don't be greedy. What, man? Well, that bid price changed a little bit. 89 cents. Fill to 89. All right, so I'm gonna do the math on my break even now. Okay, rolled out and down for 90 cents credit. So 50.10 minus 90 cents credit. So 50.10 minus 90 cents is 49.20. So it'd be 80 cents per share profit if greater than 500 or 50, greater than $50 by expiration. All right. So Oxy is done. Coca-Cola, I could probably do a roll on this one as well. Let me find my break even on KO. We have another 40 minutes for the close today. So I have a break even of 64.42. Right now, if I close this out, it's trading for, that can't be right. Oh, I see. Oh, I see. Do I want to keep the shares of Coca-Cola? I have 300 shares. I don't think I want 300 shares. I could just take the defined risk trade. Let me see here. Bull call, bullet put, 67. So it's like a $500 risk. Is it worth tying up the capital? I think I'm just going to close this down for a loss and not worry about it, but this isn't a hard one to repair either. I mean, it's not a volatile stock. Coca-Cola sitting here at 62. Maybe it takes a month or so. You know, how much lower would Coca-Cola go? I don't know. Maybe we pull back into the high 50s maybe. But I don't see it getting, beat up too badly. Still, that 3+% dividend, fundamentally still pretty darn strong. Let's go simply Wall Street, check out the fundamentals. So KO. And we have price to earnings, price to sales. Fair value at 92. I mean, I hope there's value to it. I like the price point better than Pepsi. What's the price to earnings? So 22 is the average. Monster Beverage is more on the price to earnings. Coca-Cola 25. PepsiCo, Keurig Dr. Pepper. That's one I haven't looked at. KDP. I haven't looked at that one in a moment. KDP. Yeah. I'll trade this one at like 29. 29. I'll set a chart alarm. All right, let's go back to KO. So I have the put. Right now, 65. I should be able to get real value for my put. So 65 minus 62.73, 227. And it's showing 2 and change. So I should be able to get the real value out of that trade. That's if I want to keep the shares. Now, getting tied up for how many 2, 3, 4, 5, 6, 7, 8, 9. Let's go to Coca-Cola here. So shares. It's 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. So which accounts don't I have? I think it's this one and this one. So there's no Coca-Cola exposure on those two. That's fine. How much do I tie up in the others? Probably not worth it. This account here, I think I'm just going to close it out for the loss. So Coca-Cola, 100 shares, called at 65. Let me do a roll on this one. 15 cents. Ugh. Why is it still like premium? It's it's January 3rd. Never mind. All right. Sorry, I'm just going to walk through this and go. So this one, I don't want 300 shares. So what I'm going to do is take a LIFO that's last in, first out, close down 2 of the contracts. Actually, close out 3 of the contracts. Give me the break even. So I got assigned at 67. Take away the credit. Take away the put. This will be a different assignment price. So I'll do this one for, I'm going to close down. So take this and close 200 shares. So close 200 shares. And this one close out 3 contracts. That's probably easier to do it separately. Fudge. So let me do this. I'm going to keep 100 shares. Just let me figure out a break even. So 67.50 minus 91. Okay. And then it'd be, let's say 230 minus 2.30. So 64.29 is my break even. And I'd keep the shares 64.29, put in a covered call. All right. I'll do that one. So I'm just going to close out the put. So 65 minus 62.75. I should get 225 for it. Can I squeeze out any more? Just trying to get another penny or two out of this one to lower my fees, lower my cost basis. Maybe it doesn't. Maybe it's the full value. Should be able to get 26 for it though. There we go. Close at 27. That's fair. All right, now I need to put in a covered call. So let me add in here. That is that account 67.50 minus 91 cents minus 2.27. What's that break even? 67.50 minus 91 minus 2.27, 64.32. Okay, now I'll add in a quick covered call. So if I go out to, let's go pre-earnings. Let's go January 31st before earnings on February 11th. And 65 gives me 60 cents. 64 gives me $1. I'll repair this one at 65 if I can. So add in January 31st, $65 covered call for 62 cents. See if I can sneak in a bit more. Filled at 66 cents. Okay. Added a 131 expiration, $65 covered call for 66 cents credit. And that break even is now 64.32 minus 66, so 63.66. That'd be $1.34 profit per share to repair. All right, this account, same thing here. I'll close out the put. I'm going to close out 100 or 200 of these shares. So 200 shares, 62.73. I can settle non-FIFO. Okay, so 300 shares. I'm going to get rid of this one. Close 227. Don't be greedy, tasty. Come on now. 226. Closed out. Now close the shares. Minus 200, 62.70. Filled. Okay, and then I'll add in a covered call. So January 31st, 65. Covered call, 66. Filled. All right, a lot of moving parts here for a little Coca-Cola trade. Kind of an ugly way to have to close this thing down, but let's do it anyway. 232. Filled. Close down the shares. And add a covered call. Come on. 64 cents there. All right, what else we have? Coca-Cola 100 and covered. That's fine. Coca-Cola 100 and covered. That's fine. Coca-Cola 100 and covered. That's fine. This one, no assignment. This one, no assignment. This one, I think the last one I have to do here. Yep. So close out the put. 235. 235, hopefully. Trying to get the full value out of my put. Now I'll close down my 200 shares at 65. Okay. And then add a covered call. 65 for 66 cents, hopefully. Come on. All right, filled. So that is, we checked the whole shebang. That was a lot of work. 1, 2, 3, 4, 5, 6, 7. Covered at 65. And that is a repair. So I have 1-3 expiration and 1-31 expiration for covered calls. All right, so Oxy's updated, KO is updated. Any other 0DT today? SPX, we've got about 20 some minutes left. Holy shnikes, am I going to get lucky on my freaking SPX trade today? Time will tell. Man, please jump a little bit lower. That would be freaking fantastic. My put side is looking fine. My call side, is there a way that I can close this call out? I mean, it is technically, is this right? Where's my call side? Oh man, I need this thing to drop. Is this right? Okay. I need another 7 points. Getting close. This would be nuts. If I get this thing back down to 59.25, I think 59.20. Yeah, I need to be below 59.20. This is actually kind of nice. 59.20. Surprise for the day, 59.20. Taking this all the way to the close. Now, I could still, now this can cash settle and I can still have this be out, but I might end up taking a smaller risk on the trade. But we'll see what it does. If it slides down below 59.20, I actually turn this into a full profit today, which is super, super lucky. And then I have a trade out for Monday. I made a mistake this morning on a roll. John says, how do we get caught up in what I don't know? Honestly, I've got a good spot for you. Easy way to catch up if you're willing to drop $27 is what I catch up a lot of is I've been I've moved a lot of my money over into trading stocks, options, and managing all my accounts in a Tasty Trade is a stocks, ETFs, options, futures, and crypto broker, and then I have Forex with Tasty FX. My Forex trading is still very passive and very much investment oriented. So it's like big trades, longer time frames, much bigger, bigger working areas, but active like daily, weekly, monthly options. Defined risk is like my favorite thing in the world. I just was doing a live session before this, and I've placed roughly like 45,000 trades this year. So it's pretty active. Anyway, I was going to say for practical options, if you're, just this whole thing about like what I'm doing in my portfolio is foreign to you, a good place to catch up would be this is a quick option series. And I'm just saying this like if I could teach anybody very, very, very quickly the things that I've, it's taken me a decade to do this and do this very, very well. I would do this in, this video series for 27 bucks. So that could be like the easiest way to start trading options. I'm hoping that I can be somebody that just opens up your eyes. I mean, I've traded Forex since 2007, and it was essentially an exclusive investment vehicle for me to, make money in these markets, whether it's bull market, bear market, figure out how to trade these currency pairs. And I went from, day trading on 1 minute time frames to swing trading to trading patterns to trading, bigger positions. And that's when I started to make a lot more money and a lot more consistently. And then incorporating my position trading with robots to get me some, range trading and scalping. So that's really all I do now for Forex trading. I trade big time frames and big positions, and I wait for months and months and months for these positions to pay out. I'm long dollar CAD. I've been long dollar CAD for over several months. I've been long dollar Swiss for over 2 years. I'm long everything against the Swiss, collecting positive swap for over 2 years. I'm waiting for my technical still. Dollar CAD's been long. Dollar Swiss has been long. Aussie dollar, New Zealand dollar, I'm just kind of dollar cost averaging in right now. But Forex is just like I just check it once a week. Like I check my positions, I set a bunch of levels, I go out with essentially good till canceled, entry orders, and I put the levels in that I want at small trade sizes. So Forex isn't that active for me anymore, but I still have a lot of money in it. That's fine, but I don't manage the same amount of capital that I did before. I migrated all of my managed accounts into trading stocks, trading options, trading ETFs. It's just easier. Defined risk is easier, and I say defined risk because in the Forex market, what do you have to contend with? In the Forex market, you have to contend with like liquidity hunts. You gotta contend with like stop loss running. You got to contend with a 24-hour market. You got all these like flash crashes, and you get all these things that keep you just on the edge of your seat all the time. And the market can do really stupid things, and it does it to mess up traders and look the retail traders or the liquidity hunts, and it just drives traders crazy because you can't comfortably go to sleep with a Forex account with a lot of money on the line. So how do I combat that? I trade really small and I essentially use zero leverage, even though I have 50 to 1 leverage. I trade really, really small. I keep a lot of dry powder in my account. I typically maintain about 80+% of my margin. So I can then add to levels and positions that I really, really like. And I give myself more of like a dollar drawdown and a percent drawdown as opposed to here's my stop loss. Because it is almost impossible to call a top consistently with Forex. It's almost impossible to call a bottom with Forex consistently. You can get bounces, right? You can get nice measure moves. There's really clean technicals in it. But when you see these really attractive levels, the market will spike up by 50 pips. It'll spike up by 200 pips. It'll spike down by several hundred pips. It's like, and it still goes the way you think. But if you don't know how to trade that, or you're waiting after the fact for confirmation, it just feels like you're chasing a market that doesn't ever want you to be a trader. You know, retail traders are meant to be liquidity, and it just beats you up. So I flip that around where I trade more like an institution, and I trade with like very little leverage, and I invest in the forex market. I've got robots that do extremely well, and that's it. But for me, the money for me is I can be dead wrong in time, I can be dead wrong in direction, and my risk is already determined from before I place the trade. There's no funny business about option trading. If I'm right, I'm right. If I'm wrong, I'm wrong. I move on to the next trade. It is the same result, you know? So that's what I love about it. Now, in some cases, options does offer a lot of asymmetry where you can have a lot more upside than downside. I take a lot of like measured move trades as well, where it's like, my hedges that I put on this week that paid out really nicely on Wednesday, Thursday, even this morning. I turned those into like 260% gains. If I close out my QQQ in the next month or so, it's almost a 300% gain. So there's a lot of upside potential. I just craft my trades where I know my risk is defined. Okay. Am I trading micros, minis? Typically, I'm trading micros to start, and I build it up to minis and standards. Yep. So I've started many of trades on, accounts that were, I don't know. I think the most I carried in a forex portfolio was like $8 million, and I trade anywhere between 8 lots, 10 lots when I build up positions, but that's about the biggest I got. When I start out with smaller accounts like 25 and 50 grand, I trade literally like 0.02s and 0.05s and maybe a point 0.1, and then I stack up those trades and build them up into like a 0.5 or a 1 standard lot move. But usually when I build it up that high to a standard plus lot, trades already going my way. Profit targets are measured. I'm moving stop losses and taking profits along the way. And so it'd be like it's like a bird feeder. It's like if I'm just sitting there and the trade's developing, I'm just taking one little peck, one little peck, one little peck, taking little trades. And then eventually, if I sat there long enough, I eat the whole food, like all the food out of the bird feeder is mine. And so when I find a level of support, I just peck away at it with all these little levels, and maybe I give myself, 3, 4, 500 pips of wiggle room because I just trade really small to make sure that my drawdowns are under control. But then when the trade starts to swing up and confirm and go my way, I just start adding more, and I just keep taking little pecks at it, and I build that position up to all of a sudden a $3, $4, $5 position that pays me, $2,000 or $3,000. My drawdown's like $300 to $400, and it pays me thousands of dollars. But it's very, very time consuming to trade like that. So that's what I've been doing for a decade, and it does really well. But not everybody likes to learn that way. You want to teach people how to trade forex. You're like, well, I just trade really small. It gets really boring, and I just wait for 6 months to make money. Not a lot of people are attracted to that. So I'm not trying to get people to trade like me. It works just fine for me. But in stocks and options, it's a little bit easier. You can trade, you can have defined risk, you can let the market go all the way up to infinity or down to zero. And my defined risk is I know what I'm going to lose if I lose. I know I'm going to win if I'm going to win. And typically I try to carve out a slightly higher win percentage and a bigger win than loss, and it's easy to make money. So, and it's just way more active. I mean, I take trades like literally every single day, every week, every month, every, 30, 40, 60 days is very common for me. And then there's longer term positions as well. So it's just a lot more flexible, in my opinion, on how I can generate, pretty consistent income. And also it is way easier to in trading stocks and options. You can essentially have insurance on every trade you take. You can have defined risk on every trade you take. Okay. That's correct, Kyle, on 3% of risk. Correct. But that's like everyone's saying, like 3 to 1. If you take a forex trade, I get 3 to 1 if I'm right. That's what I'm doing on an options trade. I get 300% return on that position. You know, but overall, my portfolio is up this year. I'm pushing close to 40% in gains. In my drawdown back in August, when we had that July to August spill, I was down less than 7%. So risk adjusted return, this is probably one of the best years I've had in a while. I mean, usually I'm around 19 to 20% gain annually. This year's been a bit of the exception where it's like I almost doubled it, and I didn't have to take a lot of extra risk to do that. I was just really active. Okay. Yeah, logic potato. Yeah, I get it. So yeah, I mean, thanks for coming in there, Kyle, to defend me. 300%. I mean that on risk capital. So here's an example. I just put a trade on. I'll show you the trade. So here's what I did on the SPY. Okay, and here's how it works. Like 300%. I mean, dude, I'm not some freaking faker, charlatan. It's like, man, I've been trading for 25 years. So give me a break. If you want to go follow somebody else, go follow somebody else. But the first thing I do in all my sessions is I show you my account, I trade live, I talk live, I run all these educational services, I give a bunch of trust content. I've been doing this for way longer than the freaking Discords and YouTube kids and all this fart coin memes and all that shit. Like, that's not me. So all I'm doing is giving places. Like, people have known me for over 10 plus years in financial education, and it's pretty authentic. So take it for what it is. But my point is, how do I take a trade where I'm talking about gains that are legit? Well, here is a trade that I bought a 608 put, okay, and then I sold against that a 590 put. That gives me an $18 profit potential, okay, and I paid $4.24 for it. All right, so let's do the math. $4.25 is my max risk, and $18 is my max profit. So right there on return on capital, what would be my potential? If I make $18 and I pay $4.25, that's 323% return on risk. Okay. I close this trade out. For 1531 today. 1531 minus the 425 I paid. I made 1106 on the position, and the most I could lose is 425. There's my 260% return on risk. So if Logic Potato is still here, there you go. If I lose people that quickly, then good riddance. It wasn't going to be a follower anyway, but it works. So it's defined risk. The most I could risk was $425 a contract. Most I could make was $1,800 a contract, but it worked. And, I like those trades. Does it work in every trade? No. I mean, sometimes I go 1-for-1 where I just have a high win rate. Some of my services that I do run, we trade every single day, every single week. And we're going after like little, 15% wins on capital or 20% wins on capital. But we have a super, super high win rate. So it comes in all shapes and sizes. All right. Okay, that's where we're at. 346. Anything else I need to do in the portfolio today? Overall, pretty good. Winners. Let me see here. Winners this week. Let me check the blog. Trading Journal. Here we go. So, winner on Microsoft, winner on PayPal, winner on TEVA, winner on Google, Nvidia, GLD, Meta, PayPal, Netflix, Amazon, Tesla, SVXY, and I took a loss on AMD. Today's expirations, I'm taking a loss on BAC, taking a loss on Ford, taking a loss on WBD, SPY. Took a couple small trades this week, ended up taking some losses. So all in all, like, pretty profitable week. It was fine. I managed the drawdown, pretty well. I didn't get back a lot. I mean, I'm probably, from the balance I had earlier, around like 420 for the week. I've given back less than 1% of my account. So for 2.6 that I've got in this account, I'd say probably 25K is what I've really had as far as like a drawdown, and 25K out of the 2.6, it's less than 1%. So, I mean, manageable. And, I get it. Like, the market's down, 3 to 4%. I reduced that quite a bit. Overall, that's my job. I'm trying to take less risk. I'm trying to make more money. And those risk-adjusted returns is pretty important. Jonathan, I see that there. Yeah, I watched the press conference as well. 40. Dang it. I'm gonna probably eat the loss here. Let me see. I should have just closed the damn thing out at 3 and change. Shoot. All right, we got 13 minutes left. I doubt we're coming back down. I mean, I could save some money on the trade. 450. Let me see if I get out of this thing for 450. I don't know. I'll just let it freaking go. It's like $50. It does make a difference though. I'm just gonna watch the SPX closely. So, do we get back down to these lows? That'd be sweet if we did. Anyway, no government Bitcoin reserve. I mean, that's from the Treasury. I did have a screenshot of this. I don't know if I still have it. That's the dot plot. That's volatility stuff. Mag 7, why I was getting bearish. Some equity curves. Darn it. I thought I had it in here. Basically, it was, let me find it. There's a lot that would have to happen. I mean, look, it's easy for a president like Trump, who has basically been just like a social troll and likes to tweet and, just likes to say things. speaks in hyperbole, it's easy for him to say and pander to the crypto crowd and say, we're going to be the standard in crypto and we're going to be, crypto friendly, and everyone gets all excited and enthusiastic. But when it comes to bureaucracy of it, when it comes to like actually making Bitcoin a reserve currency or putting that on the treasury somehow, it is not just as easy as like make it happen. I say this, I wave my wand. It's like, come on, man. There are so many checks and balances in this US government. It is not going to be easy. So the reality is, look, if the Fed's not on board, it's not going to happen. We moved ourselves out of the gold standard back in the 70s. What makes, a meme right now, like popular enough to swing some voters and be, pro crypto, and that's great, like deregulation, and we've had a lot of legitimacy, but it's not as easy as just make it happen. So I know Powell shot it down. They could put it out there, but it's like I think we'd be years away from a legitimate adoption. Really, you know. So I'm just not getting my hopes up. I mean, I think right now the fact that Bitcoin is still up and we hit 100 plus thousand, we've been speculating. It's been running all year. We hit the higher highs. We hit the 100,000 was a nice milestone. Okay. So moving forward, it's like, all right, so we have some pullbacks, and people that have been in Bitcoin for a while understand there's probably 40, 60, 70% pullbacks. It's very volatile. But if it maintains legitimacy and it maintains this like wider spread adoption, now it's easier to trade it. I mean, it's pretty easy to open up a wallet, right? Like a crypto wallet's fairly easy now. But for that being too complicated for some, you can just invest in MicroStrategy in the Nasdaq, and you actually have Bitcoin exposure whether you like it or not. Right? You can buy IBIT, which is a BlackRock ETF. That's a spot exchange, like an ETF, and you can hold that, and it's like Bitcoin. There are other derivatives as well. So it's just, the regulation and the adoption has been pretty impressive. It's still risk capital, but I don't think it's as easy as like make it happen. We will be the leaders in crypto. Nobody knows what the heck just happened. All right, training videos. Yep, I do, and that's why I was talking about this. Here's the link. This is an easy way to get started. Again, if you don't mind spending $27, $27 for the quickest and best education for learning options. It's as good as I can do. It's cost effective. It gets people's feet wet, gets you interested. And if this is all you did, you traded, bullish and bearish markets, you can trade that with options. It's a great way to get started. Forex trading. I've got a lot of videos on my YouTube channel on Forex trading, leverage, support, resistance. What's the Forex market? Trading 101. Keep it seriously simple. My YouTube video series has, I don't know, 70 or 80 videos in it. So if I go to youtube.com/Chris Pulver, so you just go to my channel and just go to my playlists. So I have the, bonus education. I got the Trading 101 video series. Keep it seriously simple. I would say if you're looking for just straight up education, this is a good spot. This is a good spot. I mean, the videos have been around for a while. They've been what the? I think my dog just like drooled all over me or something. Anyway, that's a good spot just for, it's timeless education. I do have some options in here. If you search my videos, you can search in options 101. There's at least a way to get started. I do have 4 videos in this kind of, entry level stuff. But I just go to the chart. If you really want to dive into specific strategies and, a ton of like really good examples, then this practical options guide is great. It's 2 hours of video. It's 4 videos. I walk you through, the strategy guide. I walk you through, buying a call, buying a put, the pros and the cons. I walk you through putting on spreads for defined risk being bullish, spreads and defined risk being bearish. It's a nice way to get started. If you like all this stuff, there's a whole new video series that's called it's the full course for practical options. It's 11 strategies, I'm sorry, 13 strategies and 11 videos. So if you digest this and you like it, I'm trying to take away all the difficult stuff, right? I'm trying to take away like all the scary stuff. Yeah, freaking fall, man. Get to 59.20. Let me check this trade. I mean, this is going to be like by the skin of my teeth here. But let me check and see. I might be able to grab a few bucks out of this trade. That would be nuts. So right now, this is trading for $3. Ooh, 290. Let me try to get out of here I'm going to take a small loss in this for the day, but I'm mitigating a lot of this risk. See if I can close this out for $3. All right, I took a partial loss on the SPX today, which manages to be like I don't know, like a couple $100. If it gets below 59.20 by expiration, then I literally forfeited, $300. But I mean, we're here literally the last 6 minutes. It's like I would be begging. So the difference is this: I just saved myself $200. Okay, $200 I just saved myself. Now, if this market was going to go down below 59.20, then I would get that $200 back and be break even on the trade. Okay, now I still have a winning trade from down here, so that actually made me about 65 cents net. So, and I did a roll today. I kind of messed up something this morning, so I'm in for about $1.15 total, and I took a manageable loss at 300. So net, I'm down 185 on the position, but it's not a huge deal. This week I have probably, I don't know, between all the trades I rattled off. I mean, I don't know. I have way more winners than losers. And I'm not going to sit here and hope that we go down because, look, in 5 minutes, if we're greater than 5927, or I'm sorry, greater than 5925, I take on the full $500 risk. Okay. So if this goes down below 5920, I could get it back and they'd be like, oh, I shoulda, coulda, woulda. But the reality is I'd rather take the partial loss, not lose the full 500. I'll lose a portion of that. And it just helps me wash away and have all the good trades this week, end up making me some net profit. It's all good. Okay. All right. So overall, I'm happy with that. Dude, my dog is just hanging out. What? What? All right. Anywho, we've got 4 minutes before this is cash settled. I'm just curious. We can watch it till the very end. Look, I mean, what a wild week it was, right? I mean, big FOMC drop. Thursday was a crazy, like, catching the market, like, oh my God, slap it around. And then the market's like not knowing what to do. And then we gapped lower today, but we used this as an excuse to balance the week. And so you're really left with nothing more than there's a little bit of a flush. There's a little liquidity sweep. And then the market came back into where? Around the halfway point for the week. I mean, you can make a lot of sense of these markets when you think about it. Like, there's just all sorts of like technical manipulation. Like, this was a trap, but the nice thing is all my hedges, not all of them, but most of them closed out for profit today. And then the way back up, I took a couple of trades bullish. I had some short-term trades. P&L was up on the day. Had a lot of winners with the recovery because we weren't just dropping off the cliff. So like all my Mag 7 stocks were taking profits. I had trades in for months on these, and this is just an expiration for Friday. So anyway, it's all good. So we good there? Okay. My Chris Pulver Discord bookmark no longer works. Yep, I'll throw you a link. So anybody that's watching this, even Loaded Potato, that guy wants to come back in. Oh, dang it. Let me see where this is trading at right now. 260, 265. All right, we got 3 minutes left. Again, like I said, wishful thinking. If it somehow gets below 520, this thing would literally settle in at a full win. Now it doesn't really matter, but I'm just curious, like, oh man, that'd be nuts if it did. So in order for me to make, like, now I've saved myself $80. Now it's back up to 280. Like, it's very, very, it's like, look, we got 3 minutes, 2 minutes left. This is going to be crazy price sensitive. So there's no real fill here. Like, the bid ask is going to be a little bit tighter. And that's why I just took the trade off early. So net, it's totally fine, totally manageable, but it was close, man. It was real close. And my trade for Monday, if I go for this trade for Monday, what's this trading for? 25 cents collected 50 cents. I'm going to see what that looks like on Monday morning. It's still pretty far out of the money. It's a 10 delta. That trade actually looks good for Monday. So cool. That actually might work out just fine. All right. Anyway, I got to go in 2 minutes for a webinar, but I got the question on the dollar. So DXY, I've said this on the dollar for the last couple of weeks, right? So I called this little bear trap back in September. I called the bear trap back here. We had the squeeze to the upside. The dollar just ran like an a-hole for 2 months, right? Bear trap in September. October was the breakout. October, November, even to December. I don't know if this dollar is going to stop. If the market shows any hiccups to the downside, so the stock market goes lower, the dollar strength might still persist. I will say this: I look forward to taking a monster dollar short eventually. I just don't know when. So I'm thinking that right now, this is still an accumulation zone because we have made this run to the upside, swept these highs. This is a make or break for the dollar. This is a key level where I could see some chop in here, and then the dollar either continues to get stronger and we come all the way up here. And this is going to be like, get excited for a trade like this because, yes, there'd be opportunities to make money there, but I'm more excited about the shorting opportunities to make like the trade of a decade. That's no joke. Like I can make enough money on that trade to make an entire year worth of profit on one index. So whenever it sets up, I'm ready for it. But I'm just saying right now, like don't fight this dollar. We swept this high, we swept this high. There's still a pocket up here for whatever reason. I mean, the dollar is just cleaning up. The euro's down, the pound is down. China's absent, so the Aussie's not looking great. The CAD has been to get its butt kicked. It's on a 2-year breakout going to 300, 400 pips higher. It's just the dollar's strong, and I just think it's silly for traders to fight it. So I'm not calling the top. I'm going to wait and assess, and then I'll see how this all plays out. But if we go higher, I'll look for some opportunities there. Otherwise, there will be a monster opportunity eventually on the dollar. So just be patient with me. If we find it, we're gonna murder it. Okay. All right. I got to go into a webinar. It's 4 o'clock. Happy Friday. If you'd like to join me for a webinar, I am going to be live. Let me see if it's posted here. If you'd like to join me for a webinar, I'm jumping in here. Let me see if I can copy that link. So I'm going into a 4 p.m. webinar now. And if you'd like to join me, everyone is welcome. Okay, that's for my daily profit play service. I'm going to do a webinar